morning, everyone. We are at the Lextran Employees Contributory Pension Plan and Trust, our pension committee meeting. It is April 23rd, 2020. It's about 10 a.m. and we'll get started. I'm here at Lextran. We're socially distanced in here. I'm the general manager. I am a staff support for this pension committee. We have with us one member of our pension committee, Daryl Sebastian, who's here. If I can just wave or say hello. On the phone, we have two other members of our pension committee, Nikki Falconberry and Fred Combs, as well in the room as well. I have Steve Richardson, our union president, and then also behind me is a union member. She was here as a public guest invited today. On the phone, we also have Pamela Thompson and Matthew Bitter. They're here from Mariner Wealth Advisors, and we will get started. We have one more person coming in, so we'll just hold on 1 second. Hello, good morning. Hi, we're on the WebEx and YouTube, and I'm just kind of getting started. Brian, if you can sit up here, we need the members of the committee to sit in the front row. They can be seen. Brian Brewster is also on our pension committee, and he's just taking a seat here. So with that and with those introductions, we'll get started. So I will officially call the meeting to order. We have 4 members of the committee. Is that a quorum to do minutes?
Yes.
Yes.
Yes. Okay. Yes. Okay, great. So do we have a first to approve the meeting minutes?
I make a motion to approve the minutes.
Make a motion to approve the minutes.
We have a first from Nikki Falconberry, and then we have a second.
I'll second.
Okay, thanks. So that first, Nikki Falconberry, second, Fred Combs. Okay, approval of the meeting minutes. All right, the next item on our agenda is the Mariner Wealth Advisors Report. We will turn that over to Pamela Thompson and Matthew Bitter. And I'm sure this is going to be one of the most either exciting, depressing, roller coaster wealth advisor reports we've had. So we're all just gonna sort of take a deep breath and hear what you have to say. Thanks so much.
All right. Thank you, Carrie. Thank you, everyone. I guess feel free to jump in with questions. I can't see you because I had to put the picture of all the people to the side so that it doesn't cover up the presentation here. So just if you have a question, unmute yourself and let me know. As Carrie alluded to, this is not going to be the most fun review. I'd say in particular, we do this quarterly. So the cutoff date for this is March 31st. That is pretty darn near the bottom of what we've seen in the market so far. So before we jump in, I guess I'll just say, as we all know, we're in the midst of a pandemic. It's a health pandemic, but it has had a pretty significant impact on economic activity and therefore on the stock market. As we all know, the stock market does anticipate. It is always looking ahead. And so what we see is, right now, a large degree of uncertainty. Nobody knows how long this particular situation will go on. And so in kind of fear of the worst, we saw a very, very sharp drop in the market right away. It happened very, very quickly. And it was one that then preceded what everyone kind of saw coming, is that we were going to start to see pretty significant slowdown in the economy. And we're at a point now, we've actually seen a very sharp bounce off of the bottom, but then we've had, additional declines. And so, we're in a period right now where we're in the middle of it. We do expect volatility to continue. We're going to go ahead and report on this, as the first quarter. I can give you kind of anecdotal updates as far as kind of rebound from what we've seen so far. But we'll just kind of jump in and talk through it as we go. As we always do, we start with, let me get my screen working here, just kind of an update on the firm. There's really nothing new from our firm perspective, only really that we are right now all working virtually. Our offices are all closed, as are many different companies. We are the kind of business where our employees, for the most part, can do what they need on a computer, on the phone. So it is not that difficult for us to be remote. It's a little less convenient for some things, but that is what we are doing. So that's really kind of the biggest update right now. As you know, we've had an office in Kentucky now for the past year, and so that's a Louisville office where we actually have two in the Louisville area. So as we go next to the investment policy statement, this is your document that gives basic guidelines for how you want the plan to be invested. The most important aspect of this is that this is a perpetual portfolio, meaning that it needs to last for as long as you have employees that are going to be part of the pension plan and need to receive payments in retirement. So it needs to be invested for growth. In having that investment for growth, we do have an allocation to stocks. You have given us a target range of 50 to 80% for stocks. That is what will provide the growth that you need to be able to continue to pay retirees for the rest of their lives. But in having that, it is also what leads to having some volatility in the total portfolio when we get into the periods that we have been in. The fortunate thing at times like this is that we do have, I'd say, a decent allocation to bonds and cash as well. So that's the other, 30 to 40% of the portfolio. That's a very stable portion. We can talk more about the bonds. I know there's oftentimes questions about that because they're not as well understood, I think, as the stocks are. But the bonds are very stable. We build you a laddered bond portfolio of individual bonds. That is an important, especially in this environment, a very important way for that part of the portfolio to be managed. It gives a periodic cash flow coming in. As a bond matures, the full amount comes into the portfolio. We don't have to go out and sell it in order to raise those funds. But that is your overall policy. The highest and most important part of it is the allocation. All the other parts are to give just basic parameters for being high quality, being very well diversified, restrictions on individual stock positions to not be more than 5% of the portfolio. Different parts of the portfolio have limitations and that type of thing. I'll stop for just a second. Are there any questions on the policy before we get into the details of the portfolio? Okay. So the next few pages are just additional detail. That was the summary of the policy. So we'll keep going here. Then we get to the overview of the market. This chart is ancient history now. This was last year, 2019. I do think it's important to remember we had a very strong year in the market in 2019. It doesn't take away the pain of what we've seen this year, but I think it's just helpful to remember we did have a very strong year that we started with. The next page here is what the first quarter looked like. These different lines represent different kinds of stocks, so they're listed across the top. The colors are, coordinate to the colors in the chart. So basically you had from a -20 to a -30%, depending on what kind of stocks you were looking at, large cap, small cap, international. It was a very, very rough quarter, on average about 25% down. As you go, we'll kind of skip this. This is just the page on the importance of being diversified over the years and how different types of investments will do better or worse in different periods of time. But let's just jump to the portfolio. So here we are at the end of March. We start with the pie chart. This is your allocation. We have equities at a 64% allocation. That's right in the middle of your range of 50 to 80%. We have seen a very sharp drop. Hopefully this is maybe not as bad as you thought, I don't know, but the first quarter it was a -16.6%. Your stocks were down 22.9, but since they're only about 2/3 of the portfolio, it was buffered by the stable portion. So the overall being a negative 16.6. Right before this meeting, I looked up where you were yesterday. From the third quarter, if we started at that point through yesterday, you're up about 5.3%. So still certainly negative for the year, but we have, as I said, we have seen, a bit of a rebound since that point. The very lowest part of the market so far was on March 23rd. So the 31st was still pretty close to that point. We have seen a bit of a rebound since then. But as a reminder, you've seen the other historical information already, but last year the total portfolio was up 21.2%. The long-term average, and we always show you since inception, so that third column that goes through 3/31/20, I wanted you to see how much difference it makes, even on a very long period of time, just the dates that you choose and having the end of that period being such a rough one. When we do the full inception through March 31st, it's a 5.5% annualized return. But if we back that up and say, well, what was the long-term average through December, it was a 6.7% return. So ending with that rough quarter really makes a difference, but it's true vice versa. So once we do get through this, we will see a nice, more full rebound in the stocks, and then you will see that long-term return come back up to a more normalized level. So the target has been 6 to 6.5% in terms of the long-term average, which we've consistently been at that level. But right now, ending with this really rough quarter, it brings back down. And I'll stop for just a moment. Any questions on this at kind of a high level? Yeah? Okay.
I do have one question, and this may be for Ms. Falconberry. Will the actuarial report, is the actuarial report a calendar year or a July 1, June fiscal year? Because that may impact our actuarial report.
My understanding is that was a calendar year.
Okay.
Yeah, I'm pretty sure it's a calendar year.
Yeah, so that will still show a pretty high, overall set of return, set of numbers, because the end of last calendar year was very, very strong. The big question is what happens between now and this next calendar year. So we've still got some time to work through that. Okay, I'm going to go to the next page. I'm going to let Matthew kind of give some detail on these next couple of slides here on the detail.
Yeah, so what we are looking at here are all of the individual stocks in the Lextran portfolio, and we have them separated into 3 different categories here. So I'll start on that far left-hand side, and these are going to be what we would call the stable core or stock portfolio. These are going to be more defensive stocks that will pay a higher dividend yield, or they're going to be consistently growing their dividend, and they're also going to tend to be less volatile. In the center column are the cyclical stocks that tend to fluctuate more with the economic cycle. And then on the far right-hand side are the higher growth stocks that are not as sensitive to the economic cycle. And these are going to be consistently higher growth and faster growing companies, either because of the industry that they're in or their business model. And the main focus on this page is the balance that we have between all 3 categories. And as you know, we will strategically our weighting in any one category, which we have been doing as we see things evolve with the economy.
Okay.
And then this next page is showing us the top 10 largest positions of those stocks that we just looked at. And this page, more than anything, is a focus on risk control. As Pam mentioned earlier, your investment policy statement states that we can't have any one individual holding of 5%. And if you just glance down that far right-hand side, you'll see that we are within your guidelines with the highest at 3.9%. It's also really nice to just take a glance down that sector column. You can see the top 10 alone. They're very well diversified across a number of different market sectors.
And I just want to add here, a point that we like to make is that a lot of times these largest positions have simply grown to be that level. And it's you can see here, every single one of these stocks, even at this low of March 31st, every single one is still above where we bought it, most of them significantly above. So I think it's just a helpful reminder that, long-term growth is still a valid concept. Just right now we're in a temporary pullback. But all of these stocks are actually still much higher than where we bought them.
And then this page is just a review of the funds. As you know, we've added in a couple of funds for some added diversification in the large cap space, and those are listed there. And then we also have passively managed funds for additional allocation to mid cap as well as international. So those funds are all listed there with a few different time periods of performance listed as well.
Yeah, and this is really what we call the blending of active and passive. So active being the individual stocks and the individual bonds, and then the passive being those funds.
And this last page here of the detail is a review of the bonds, and as Pam mentioned, the bonds are going to be a very stable portion of your portfolio. They'll act as a buffer against volatility as we do see it in the market. And because of that, we don't take any unnecessary risk. So you're invested in all very high quality individual bonds. If you take a look at this quality rating chart here on the right-hand side, this is telling us that all of the bonds you own are of investment grade. And for your investment policy statement, they are all of investment grade. And we also, on this left-hand side, see that laddered nature of the bond portfolio with the majority of the bonds coming to maturity in the next 5 years or so. And that's significant. It's a nice hedge against interest rate as those bonds do come to maturity. We'll be evaluating where interest rates are at and then redeploying that capital from there.
Yeah, and I just want to add one more point here. Because of the volatility that we've seen, there have been actually some concerns that other clients have raised with us, even about their bonds. That last week of March, or close to that last week, where the stock market was hitting its bottom, we had quite a bit of volatility. There was also what we call a lack of liquidity in the bond market. Just because of the uncertainty, there was an unwillingness by investors to purchase bonds. Bonds are bought and sold just like stocks are. And even though they're a fixed investment that we consider very secure, we hit a period of time where it was very difficult to sell a bond. And if someone needed to sell a bond, they would be taking less for it than what they normally would. And that was a great example of how important the way that we are managing your bonds is to the stability of the portfolio. When you look at that pie chart on the left, that maturity distribution, that makes a really big difference. You can see that there's $600,000 coming to maturity within the next year. There's another $858,000 coming in the next 1 to 3 years. And if you saw the detail behind that, it's a series of individual bonds coming due every few months. What that is, we don't have to go out and sell your bond. We don't need to find a buyer willing to buy it. If we wait till it matures, that is a company that has a contract with you and is basically writing you a check on that due date. You think of a CD maturing. On that date, you get your cash unless they default. And with the quality on the right, these are very high-quality companies. We do not have concerns about whether they will pay back on the maturity date. We know that they will. So having that built-in staggered maturity is, at a time like this, a very important way that we are able to manage the cash flow, even in a crisis situation, so that we can always meet the obligations that are needed for the pension payments that are going out to folks. And there's not ever the concern that, oh my gosh, we might have to sell something at fire sale prices just to provide the cash that's needed. So that's, especially within a pension plan, that is a really important aspect of the way that we are managing this for you. Okay, so our next part of the presentation is just the outlook. Are there any questions on some of these specifics in the portfolio before we do that? Gary?
Okay,
So at the end of
but
last
actually, maybe
year.
it's okay, because you're taller than I am, so you're off camera, so maybe it's good. Can he sit down and you still see him okay? All right.
Yeah, I can see him better
I can
there.
see him
Yep.
better there, yeah. Okay, so the end of last year, we had approximately $15 million in our portfolio. And now we have approximately 12 and a half. So in the last 3 months, our portfolio has lost approximately $2.5 million. Is that correct?
It's that 16%
It's that
through March,
16%
yeah.
through March, yeah.
And then back through yesterday, it's over 13 million, and I don't have that screen in front of me since I'm on this, but it has come back up as well.
Oh. Okay, thank you.
Yeah.
Yeah.
Okay, so going to the economic and market outlook, right now there is, as we said, a lot of uncertainty. We want to highlight some of the things that have been happening. So the first government stimulus that went through is what we have summarized here. There was yet another smaller one, but this is a pretty big difference in how things are happening versus some of the prior recessions that we've had. You know, even some of the other economic shocks where it took a very long time to have, you know, actions taken that could help. We did have a very quick call to action in the federal government to come up with a $2 trillion stimulus package that you can see the variety of amounts to the different aspects of the economy, the different participants, whether it's individuals, businesses, public health, et cetera. More of that is happening to continue to fulfill a lot of the need, if not the entire need. We all know that, but it makes a big difference to just help fill the gap during this period of time of this, you know, the stop to a lot of the parts of the economy. One thing we watch for, since we are very focused on stocks, that's the part of the portfolio that is right now down, is, you know, what are the signs that a market has actually bottomed? Right now, we are not confident that it has. We think that there's a decent possibility we could return to those lows, but there's always a possibility that we've already seen the low. But these are just kind of 7 different points that can start to indicate, once we see all of them, it's pretty sure that we've already seen the bottom. But the first 2, extreme oversold conditions, apocalyptic sentiment, are the extreme negativity you see on days like March 23rd. We did see that. We've seen it on a few other days where it's just kind of throwing the towel. It's where you see the really, really sharp negative days. But then as you get through that and you start to see contraction in stocks making new lows, meaning fewer new lows, stronger breadth, meaning more participation in the upside of the market across broader areas of the market, the risk-seeking leadership, meaning the companies that are a little bit riskier doing well, and then even indications from the bond market. That's when we say credit markets, we're just talking about the bond market. Looking at some of those different aspects start to indicate that, yeah, we are starting to really see a healthier rebound. You know, we've seen, you know, one of these, which is the extreme lows in sentiment. This is kind of a busy chart, but it's actually going back to 1987. Looking at a ratio they call the bull to bear ratio, but it's when it's above 1, it means there's more positivity than negativity. Every once in a while, it's gotten below 1, and so you can see here, this was back early April, that we had been at a below 1 level. We've been there a handful of times over the past 10 years. But we did check that box, and we certainly did get that extreme negativity. It's possible that we won't see that level again, that it's, you know, that the remaining evolution is just starting to build the strength and get more breadth. If we do see, you know, things start to turn more positive, there's a chance we could go back to that still, which is something to keep in mind. We thought it would be interesting here is a look going all the way back to 1929 at every recession that we have had. And I will say, I guess I haven't said this yet, we are definitely in a recession now. We don't think there's any question about that, given just the sharp contraction in economic activity. But if you look at all the recessions going back to 1929, what we're showing here is the length of each of those and the number of months. And then also looking at the stock market, when was the bottom of the stock market that related to that recession, and how did that compare to the bottom of the economy or before the economy started to expand again? It is almost always before, so the market is ahead of the economy. It's always looking ahead. A variety of different time periods here based on what was going on, but the average was about 4 months ahead of time, meaning then that what we need to translate that into what's that going to be like on this one. We do expect that the market will have bottomed before the economy, and it might be more than 4 months before. But regardless of the amount of time, what that means is when it's going to be when it still feels really, really ugly, really uncomfortable, and people are still feeling like it's a really bad situation for the economy. That's what it's going to feel like when we will have already seen the bottom in the stock market. It's going to be when nobody believes it, everybody's going to doubt it because it still feels really awful. That's when we will have seen the bottom. It will be well on its way back up before anyone says, oh, guess what, the economy is finally getting better. So it's in the middle of this, it's really important to remember that, because it can be really tempting to say we should just pull back, let's get out of the market, let's wait for it to feel better, and then we'll get back in. And that is one of the most dangerous things you can do in investing because of this concept that the market moves first. And if you miss those, even just first couple of days back up, you can take years off of your future growth and your future return. So that's where we say, what's really important here is that overall balance in the portfolio. This is exactly why we review the investment policy statement every single time. This is why there is a balance. You don't have all stocks. We don't put 90% in stocks. We've got a good third of it that is very, very stable. It can provide for the cash needs for years. We're not going to need it for years. We think this rebound will be, sooner than that. But that's why the portfolio is built the way it is. So it's doing its job for you. It's not fun to see, a couple $1 million come off the total. It's 15, 16% off the total. But we will see that come back. We just have to get through this. And then the final page is just kind of our outlook. You had seen before this happened, we had put together an outlook for the full year of 2020 based on, economic expectations where we started in the market. We've kind of redone this to say, as of March 31st, which is the quarter end close to the bottom that we've seen, at least so far to this point, what do we expect from here? So from an economic standpoint, we are expecting the GDP, which is the measure of the economy, to be a pretty negative number in the second quarter. Right now, we are expecting we will start to see things coming back as we get into the third and fourth quarter, which will still result in a negative number for the year. So right now, we would be predicting a negative 3 to 4% for the full year, mostly because of the second quarter. And then just various reactions from the Fed. We expect them to still be very accommodative. Interest rates are very low right now. But getting through this and seeing the market rebound, and we've already seen some of this, we would expect if we put a middle of next year, end date on this outlook to say, what do we expect kind of from this past end of March through the end of next June, that's what we would say our base case, what we'd say most likely is that we will have seen a full rebound in the market. That 32% is basically what would get us to just a little bit above where we were earlier this year before all this happened. And of course, nobody has the crystal ball, but we like to at least let what we would consider the most likely and our current expectations, but acknowledging the things that are still unknown. So I will stop there. Are there additional questions? Do you want me to keep talking, or would you rather get on to other things? So I guess the other thing I would say, we are, always very happy to get together and answer any questions. I know there's been a few times that we've had meetings with the union. We're, of course, always happy to do that once we can actually meet in person. Right now, we're not doing any of those. And then also, I know you're going through your 5-year process with the RFP for the investment management. So we did submit our response to that. So we wish you well in looking through all those. I know that's a pretty big project. But, please let us know if there's any questions. Hopefully we outlined everything in a way that was easy to understand and make that assessment.
Pam, I think we have one more question. I see someone standing.
Okay.
So let me turn them back on.
Yeah. Yeah. Okay.
Please sure introduce yourself since you're not.
That I am a contributor.
Right, just introduce yourself.
Yes, my name is Stephen Richardson. I'm the president of Local 639, and I'm also a contributor to the pension. Can you hear me?
Yep, I can hear you.
Okay, it has been brought to my attention by some employees that we have found discrepancies in our reports from Lextran of seniority and years of service to certain members. And we have decided that we want to either ask the arbitrator or your company to give us a few reports on who is drawing from the pension.
She doesn't have any, I don't believe that Mariner has any.
That's why I said either, I don't know if it's for them or the arbitrator. I mean, the
It's the actuary, I believe.
Yes.
Yeah.
So.
That's not that's the actuary.
The actuary is not included in this pension meeting?
He was not available. That company and Steve Osborne was not available. They were invited and included on all the information, but he was not available.
I wasn't privy to that information, but still, I want my request on record.
Sure, Steve, if you can just submit what the request is and where you see the discrepancies to Steve Osborne, that's fine.
I would like to do it now.
Okay,
Here.
go ahead.
Okay, as I was saying, we have found some discrepancies in the years of service. And what we were concerned about was if these people was to retire right now and their years of service reflected, let's say 20 years, and they've only actually been here 12 years, would they actually draw benefits from our pension? That being said, we have decided that we want a list of people drawing from the pension, a list of people currently drawing from that are contributing to the pension, and we would like a list of people that have drawn out their money from the pension. So I would like to, just go on the record. Like I said, I didn't know if the actuary was going to be at this meeting or not, but there was questions and concerns that was brought up to me, and I told the members that I would look into it. So, just going on record to say that because we don't want anybody drawing benefits from our pension that actually hasn't deserved them or served time here to receive benefits. So if you could pass that along to the actuary request, I will be putting it in writing and trying to get it out to the actual person that needs to do the reports.
Could we just make sure to summarize the request? Ms. Falconberry, do you mind to read back what the request was, just to make sure that we got the full request?
Yes. Steve, so the union has found discrepancies in years of service. They would like a list of people drawing current retirement benefits, a list of people contributing to the pension plan, and a list of people that have been refunded. How far back for the refunded do you want to go?
At least back to 2002.
2002?
Yes.
Are there specific employees that you are concerned, or you can get the entire list, but are there particular people that we should be looking at to address the issue?
we would just like to get the list first, and then once we confirm the discrepancies and everything, we will be bringing it to your attention with names and the discrepancy we found. Thank y'all.
I think it's, unless we have any other questions for Mariner, then I believe we can move on to our new business items. And in that case, Ms. Thompson and Mr. Bitter can please drop off the call. We have some other business to discuss. So thank you.
Okay.
Thank you, and take care. I hope you all are staying safe and everybody in your families is doing well.
Okay, thank you.
Okay,
Bye-bye.
thank you. Bye-bye.
Thank you.
Thank
Bye.
you. Bye.
So, the next, Fred, how's the echo? Is Nikki still on?
Nikki is here.
Nikki is here.
The echo is bad
The
when we
echo
speak.
is bad when we speak.
When you speak?
Yes.
Yes.
Okay. Stop speaking then, and then you won't have the echo.
You got it.
Got it.
So the next item of business is an item that we had from the last meeting, which is a language in the pension plan and trust document regarding early retirement. This was an edit that was brought to our attention by Steve Osborne of Osborne Career and Associates. Noticed that there was language in the document itself that made it sort of confusing about when early retirement was. It sort of put in two places or multiple places in the document itself, made it a little just we suggest an edit that makes it clear when early retirement age is. And I believe that we were voting to make that change and then take that to the board of directors, which is the process for updating the pension plan and trust document. If we can move forward on this, just vote to move forward on that, we can take it to the trust document. I mean, to the board of directors in order to update the trust document. If not, we can bring it up at the next meeting. This is really a change in clarification. So we can vote on that with the members of the committee. I think Nikki's going to share a screen perhaps. So I will defer to the members of the committee if we want to vote to move on that or table to the next time. Go ahead.
We're returning, and the question is about the definition is defined as part of the pension plan.
Right.
And he said, well, typically you define term at the beginning, and then you, every time you use that phrase early retirement, you don't have to redefine it.
Right, and Nikki, if you'll jump in, I know it's a little hard with the effort, but my understanding is, yes, we define early retirement in the beginning, and in multiple places, we say early retirement is X age, and that age is different in two different places.
Can you
It is
also
fully
repeat the
defined.
question?
The question was that, or the statement was, in speaking with an attorney, what attorney was that? Oh. An attorney, not of record and not Lextran's attorney, not the attorney representing the pension, but that early retirement would be defined in the beginning of the document, which in fact it is. The problem, or what we're trying to clarify, is that it's defined in the beginning, and then there are other mentions of early retirement age that are in conflict with one another. And Ms. Falkenberry, if you wouldn't mind to jump in if I have misspoken.
No, you stated it correctly. It listed in the beginning, like Daryl says, and then in another place in the document, it it has a different the ages should be the same. I think the second section doesn't list the age, and it's conflicting language to the beginning of the document. So the actuary has suggested that we clear up the language for the second definition that matches the first one.
The options before us right now are to table this discussion until the next meeting or move forward with the language change, approve it at this pension committee level, and then take it to the Lextran board of directors for approval. But it is up to the committee to make that decision. So we can call for a first and second or vote, or we'll defer to the members of the committee to take action on that. I will say, as staff support to this would appear to be this is a clarification change. It is an immaterial change to the benefits of pension plan and trust. It's an edit and a clarification that will absolve conflict if someone says, oh, early retirement at this age, and then let's say the other person says early retirement. So it's a matter of clarification, not a substantive or material change to the benefits or any value.
Correct. It's just a clerical.
It's just a clerical. So that we can prevent
Of the pension.
of the code change.
Okay. Okay, so what we can do, I think, is ask Steve Osborne to write the language change, and the union can take that to the membership. You know, to draft up the change language.
Okay.
Okay. All right, the next item on the agenda, and then we should bring that up at the next pension committee meeting. And okay, then I'm sorry, the next item is the procurement of the pension fund management investment services. So this is a procurement to manage the fund. So the current provider of these services to Lextran is Mariner Wealth Advisors. We just heard their report, and we released a request for proposals for pension fund management services last month and received proposals back. We received a number of proposals, and the next step will be to evaluate these proposals. So for the purposes of the pension committee, that is the information that we can share publicly, that we've received proposals, we are evaluating them, and we'll make an award based on the evaluation committee, bring that to the pension committee, and then approve that at the board of directors. So if we could set a date for the evaluation committee meet, I would suggest about a month from now. And then what I would like to do is close the pension committee meeting and then just have an evaluation committee meeting, because that is not a public. So if we can set a date for the evaluation committee meeting, I mean, I guess we can do that in the actual evaluation committee meeting, but I thought it might be appropriate to set the meeting date. Yeah, we've got the proposals. That part has closed. So now we have the proposals. It'll be the evaluation committee. About, I mean, a month from now, perhaps. We'll defer to the pension committee members.
I mean, I think it only takes a couple weeks to evaluate these things. But we need to make sure we have a recommendation ready for the next pension committee, right?
Yes. Yes, and we may need to hold, We don't have the next pension committee meeting date set because we're at the end of our fiscal year meeting schedule. So those two things could be done in concert, if you will. We could even, I would suggest you could even hold an evaluation committee meeting just prior and then hold a pension committee meeting. I mean, that might be a efficient use of
Would the afternoon of May 14th work?
I mean, we do need the members of the committee to confirm their availability.
Fine with me.
Brian, Daryl, would May
As far as I know, 14 should be good. Yeah.
okay, morning.
Does the time of day matter? Okay. Okay, we'll go with the 10 a.m. on May 14th.
Okay.
And then maybe what we will also do is plan to have a pension committee meeting immediately following, so it may be 10:30 or maybe 11 a.m. Pretty much, but two different purposes. The evaluation committee is not a public meeting. The pension committee would be considered a public meeting, part of the board of members of the. Okay, so May 14th at 10 a.m. then May 14th at 11 a.m. for the pension committee, where we would, vote to make a recommendation to Lextran Board of Directors. Okay. All right. If there are no other questions, no other old business, no other new business, I think we can adjourn the pension committee, but then I would like the pension committee members to stay so we can talk more about the specifics of the evaluation and these proposals.
I make a motion to.
Okay. So we have a motion to adjourn. Do we have a second?
I'll second.
Okay, second from Daryl Sebastian. All right, so that will close the pension committee meeting. Thank you for everyone who is watching and participating online or on the